It's not often that you get a common chorus before the union budget, but I think everyone this time agrees that Finance Minister Arun Jaitley has some very complicated trade-offs to manage. On the one hand, expenditure increases that roughly amount to 1% of GDP. On the other hand, to establish and maintain fiscal credibility, he must cut the fiscal deficit by about 0.4% of GDP. The math itself is complicated, and when you dive deeper, the complications increase further, which makes this a critical budget for the Indian economy, for investors, for India Inc., and pretty much everyone who's watching. We're going to be bringing you detailed analysis of the speech when it begins, of course. 11 o'clock is the scheduled time. After that, the implications right here on NDTVProfit. But let's bring you up to speed with how Arun Jaitley has been spending his morning today. A visit, as always, scheduled to meet the President, details of the budget shared with the President of India, and then Finance Minister Arun Jaitley made his way to Parliament House, where a mandatory cabinet meeting takes place, and then, of course, presents the budget in Parliament. Prashant has been, on a marathon session since 8 a.m. and we've covered through you, Prashant, pretty much all of the ground. The stage is set for this budget, and it bears repeating because it is a complicated one.
Yeah, I mean, but you kind of sort of put it very simply that increase expenditure and contract expenditure as well. I mean, you got to do both at the same time, so the numbers just don't add up. And as Sajid just before the break was telling us, the only way to do it is sell its stake in companies. I mean,
and in an imaginative manner, because the excuse that market conditions aren't conducive is a long-running one that seems to have run out of steam.
Yeah, absolutely. I think to keep both stock markets and bond markets happy is going to be an extremely difficult task. I mean, bond markets want the government to stick to 3.5%. They've seen yields move up despite rates, for example, being cut by the Reserve Bank of India. Actually, government issues have started to devolve. I mean, take a look at what's happened over the last 10 days or so. There's so much supply which is hitting the market that, and more is expected. I mean, states, for example, are expected to be big issuers. In financial year 17, you'll have the Uday Power bonds as well, which will need to be subscribed to as well. So I think, bond markets will like 3.5, but if you ask industry, if you ask stock markets, stock market participants, they tell you, well, they need to spend. The government needs to spend because this is not an economy which is growing at 7.5%, 8%. Capacity utilization, other indicators just doesn't sit well with that number. Our panelist with us, Mr. M.S. Unnikrishnan, is joining us right now. He's chief mentor. He's managing director and CEO at Thermax. As always, a regular on the budget session. Mr. Bobby Parikh is chief mentor and partner, BMR and Associates. Mr. Aseem Chawla is managing partner, MPC Legal as well. Thanks very much, all of you, gentlemen, for being here. Mr. Unnikrishnan, let me start with you. You and I have discussed this many times in the past, and you've maintained that the economy lacks a certain spring in the step. No core sector projects, no large projects for that matter of note. Utilization levels very, very low. So spending is the key point here. Mr. Unnikrishnan?
Yeah. First is private investors seem to be shy of investing because their confidence is lacking. Apart from that, the capacity utilization of the existing capacities are feeble of maybe 60 to 70%. So there is no sense of urgency prevailing in the industry currently to go ahead with starting the investment cycle. So who is going to take the lead? So my expectation is there should be sufficient impetus for the government to be investing. I do agree that banks do not have capacity to possibly lend to every sector. But there are sectors where there is still economic viability in existence. And I would certainly expect that the budget should be addressing that. And it should be not in terms of commitment in terms of what we're going to do in the current year. In terms of the balance 4 years available to the 3.5 years available to the government, what are they going to be intending to do with the public sector and infrastructure investment? That's our expectation.
But we were talking about the fact that this is a challenging budget for Mr. Jaitley because there's so much pressure to spend.
Yeah.
You've just articulated that, and that's just one sort of pressure point. The other pressure point is coming from the Central Pay Commission recommendations implementation, from OROP, from the fact that banks need recapitalization. Are you sort of tempering your expectations? The rationale is solid, but tempering your realistic expectations?
Absolutely. I mean, knowing fully well that government is going to be spending in excess of 100,000 crores of rupees only for Europe and the Seventh Pay Commission, there is also saving already happening on account of the crude oil price reduction. They have also not spent sufficiently based on what they committed in the last year. I mean, if you were to go through the budget versus actuals, which is going to be coming in any moment, I don't think in majority of the areas what was expected to be spent also got spent. So I don't think we need to be over projecting a big number that we are going to be spending. Which are the areas that we are specifically talking that should be led by the government? First and foremost, railways. We had a fairly positive budget presented by the railway minister a couple of days back. Allocations towards that, so that it can really happen on the ground. Last year we committed 50,000 crore worth of railway projects. Didn't happen in reality. So can we make money allocation and the resource allocation to ensure that does happen? Second is Mr. Gadkari has already spoken about wanting to accelerate the road construction. Is there money available for it? So allocation for that one. Mr. Parikh has possibly spoken about n number of projects to be initiated in the current year with support from Make in India. Is there money allocated for it? And allocation of money doesn't mean a budget speech. What we talk about is it has got to be made available to the people who are going to be spending, not with something like maybe 7 or 8 stages of approval needed, and the year will be gone by.
Sure.
So that's what you're looking.
In railways as well, for example, I mean, there was a big difference between what was, as you were saying, budgeted and what actually got spent. And that is because of lack of projects as well, right? I mean, then the entire system comes into, bureaucrats have to put together proposals, into which money can be pumped in. And admittedly, those were few in number last year. So I think it's not just the money we're talking about, it's also the implementation of it, right?
Absolutely right. See, if a budget is made from the grassroots level, where a department is asked as to what you're going to really spend, not your wish, then you would have already had a detailed project report completed, somebody who's going to execute it, a team already ready. Then you're waiting for a capital expenses approval from the government. But here it is more of everybody gives a wish statement. Assimilate.
It's more top down, right?
Absolutely.
I mean, it has to be more bottom up.
Absolutely.
Okay, fair enough. Mr. Bobby Parikh is with us as well from Delhi, from Bombay. Okay, Mr. Parikh, thanks very much. Good to have you here as always. From a tax perspective, what really are the 2 or 3 big bullet points that one should keep a close eye on?
So I think there's 2-3 things. I think one is on the Ishwar committee recommendations and the Shom committee recommendations. Both the Shom committee recommendations, of course, have been available for a period of time. The Ishwar committee recommendations are more recent. And the question is, and the thing to look for is how many of those and to what extent do those recommendations find their way into whatever it is that the finance minister will be presenting. So that would be one. I think the other issue is that at least there's a large amount of speculation on what's going to happen to capital gains tax and long-term capital gains tax, and what's going to happen to dividend distribution tax, and whether it's going to still remain as it is or whether it's going to be replaced with a dividend withholding tax. What's going to happen to the rates of effective tax for higher income earning individuals? I think those are some things which there has been much conjecture and speculation on, and people will be looking to see what happens with those provisions. On a sort of larger issue, last year the finance minister said that he wanted to bring down corporate tax rates from 30% to 25% over a 4-year period. We are into the 2nd year now. So the question is, will we see a roadmap for that being established or being described in the budget this time? The expectation is that he should start with a percentage or 2 during this, starting with this year. But there is also a roadmap to be set out for how the different incentives will be withdrawn by correspondingly over the next 2-3 years. And so there is a white paper that the CBDT had published, and we need to see how that is sort of described in the finance minister's speech, and whether there is a clear map that is set out for how those incentive withdrawals will occur over the next few years is something that again is an important issue to watch out for. So I think that these, and then beyond all of this stuff, there is over the last few months there has been, or over the last couple of years, there's been considerable sort of broader discussion on base erosion and profit shifting, or BEPS. This is an issue around the world. The G20 signed up for it. Now many more countries have signed up, and the whole sort of effort was to look at how tax laws need to be rationalized around the world to be able to reduce aggressive and undesirable tax planning by corporations and individuals, thereby depriving countries of their taxes, of the taxes that are due to them. So India is of course a signatory to everything that the BEPS working group or the OECD working group has done. And so I would imagine that there will be, as a part of the rollout of many of the BEPS actions, that there will be actions that will be incorporated into the budget, which will start giving effect to some of the BEPS provisions.
Bobby, good morning. This is Manvi also joining into the conversation. I'm going to pick one of the points that you mentioned, and you had a pretty exhaustive list out there, but I'm picking the one which is perhaps of the widest interest to all sorts of people who are watching right now, and that is the speculation around the long-term capital gains and the DDT. I know this is speculation, hence I acknowledge it's an unfair question, but what could any tinkering on both those mean in terms of disruption? What is the anticipated disruption you see if the finance minister chooses to tinker with the long-term capital gains tax, dividend distribution tax, based on your many years of, observing taxpayers, their behavior and policy interface?
So I think, I think the long-term capital gains tax, there are two sort of different thoughts which are, two types of things being speculated. One is that what may be changed is that currently listed equity, when held for more than 12 months, becomes long-term. And any gains from the sale of listed equity on a stock exchange after 12 months is exempt from tax. It's liable to a STT, but otherwise there is no capital gains tax under the income tax law. So one sort of discussion seems to suggest, or one view that seems to be going around, is that what the government might do is extend that 1-year period to a 3-year period. This is something that they did for unlisted shares last year, where again they sort of extended the holding period to qualify as long term from 12 months to 36 months, and that they might do the same thing for listed shares going forward. The other view that is doing the rounds is that 1 year may remain 1 year, but it may no longer be exempt, and that there might be some tax that is imposed rather than it being zero rated. So either way, I think it is from a sort of market perspective, I would imagine that this is something that will have negative implications. Certainly, if it is 1 year to 3 years, that in my mind does become a material consideration for investors, and particularly for portfolio investors, and whether their investing horizon may be longer term, but it does materially alter the economics and the return expectations that people will need to bake into any investment decision that they make. And so it is something which will be troubling for the market. The dividend distribution tax, on the other hand, is something that is that is less clear in terms of how the broader impact might be. Clearly, for promoters of large public companies and for many high net worth individuals who have portfolios which generate substantial dividend returns, and typically it will be a promoter issue or a substantial shareholder issue rather than a regular investor issue. For them, the effective tax rate is going to go up materially from 20% to north of 30%, whatever the tax rate might be. So that will be an impact for them. But for the rest of the market, it's not as if that the investments take place on the basis of dividend yields. That's a relatively smaller part of what equity what portfolio investing in the public markets sort of tends to get guided by. And so that might on the whole actually not have a material, I don't know that it will have a material impact, although it's just the fact that in a sense some tax rates might effectively go up may get reflected in how the market responds. But on an overall basis, I don't know that it sort of alters the landscape, because there might actually be a bunch of investors, particularly the FIIs that participate in the market, who actually might benefit from a lower effective rate on dividends rather than the rate going up. So I don't think that the impact will be uniform for everyone as far as dividend withholding is concerned.
Okay. Madan Sabnivas is with us as well from our Mumbai studios. Aseem Chawla, Managing Partner, MPC Legal, is here in our Delhi studios. Mr. Chawla, why would the government do this? I mean, this entire long-term capital gains tinkering with for what reason? For what purpose?
I thought equity is one issue which, and I'm glad Mr. Parikh made a very extensive exposition of this. And if these are desperate measures in terms of augmenting the revenues, considering that you can't tinker much with corporate tax, hopefully, and if you have to honor the promise, so to say, of giving a roadmap to corporate India, and from where you're going to garner more tax revenues, if that is the key or the precipitator of it, then it might be very regressive in the present times. So I don't see that from a timing point of view, this would be very apt for him either to
tinker with the long term. Will he have to do something to the STT?
Of course, happens? Then you have to look at the entire capital gains framework taxation as a whole. I mean, you've already made a distinction between listed securities and unlisted securities, off-market, on-market transaction. So, and that's what my worry is, that unlike last budgets where we've seen where one particular isolated amendment does take place without realizing the ripple effect on it, then we have one step forward, two steps backward. On the larger issue, I have that whether we do this tinkering either in terms of period of holding or we bring it some kind of additional tax, it should be very, very carefully thought through in terms of its domino effect. We should not lose the sight, Prashant. We've had this particular government had very difficult times in dealing with one small issue of taxation of FII, and how much chaos did it create in terms of setting up committees, etc. So coming back to the point, look at capital gains tax as an entire framework. If you were to decide to swallow this bitter pill, I mean, markets, whether they have factored in or not factored in, but certainly not best of the times. And also on capital gains tax, the tax revenue department has always had this long temptation in terms of looking at the beneficial provisions of treaty insofar as providing capital gains tax concessional treatment, and that position often gets challenged one way or the other, and the High Court coming to the respite of the institutional.
What are the numbers involved? I mean, if you say, for example, if you increase the threshold for claiming capital gains exemption from 1 to 3 years, and then you have to offset it by giving relief on STT. What is the trade-off?
I mean, the trade-off would be that you're looking at from zero, you're looking at a 20%, which is the overall rate. Now you look at 15%, which is an intermediary rate, because you look at a 15% taxation so far as securities is concerned. Which also brings me to another point. This particular budget should set a template of dealing taxpayers not as one. You can create some intelligible differentiations in terms of small taxpayers, institutional taxpayers, and small and medium taxpayers, and therefore can't bring one amendment for a particular exigency which affects all of them. And this also dovetails to the issue of dividend distribution tax. Twice we have that flip-flop in last 10 years where we've gone back to the withholding tax regime, and now we're talking of distribution tax again getting revisited. It might be a flip-flop again, but if the issue is that, it's not creditable if the recipient of the dividend is somebody who is paying taxes in another country, and therefore tax credit is an issue, create a special regime for those particular kind of recipient of dividends who are tax residents of another country. Leave out small investors, leave out senior citizens. I mean, 10% of our taxpayers are senior and very senior citizens. Can't lose that sight out.
You know, if I want to, just quick interruption there. In a sense, the economic survey set the tone a little bit by talking about a different tax approach for different brackets of income earners. I'm just going to hold that thought. We'll take a break, back in a moment, and we'll sort of pick up from exactly where we left off. Welcome back as we're counting down to the Finance Minister's speech in Parliament to present the Union budget, you notice that the markets are actually a bit shaky. You've got the Nifty at 7,015 kind of levels, so it's down about 0.25%, and the Sensex at 23,115, down again about 0.2%. Keep an eye on how those markets trend. Of course, during the budget speech is a whole new story. I'm very pleased to welcome at this stage Pradeep Chaudhary, former chairman of the State Bank of India, joining our panel, and of course Atul Joshi, founder CEO at Oyster Capital, and with us Bobby Parikh, Aseem Chawla, Madan Sabnavis, and MS Unikrishnan. I'm going to come to Madan straight off for a quick look at the numbers, the key numbers that you're going to be watching out for. We can always start with the fiscal deficit one, because I think that's going to set the tone and temperament for the market reaction as well. Madan?
Yeah, I think that will be the major takeaway from this budget. Rather than an expectation, I think we need to see what the ideology of the government is, whether they are in an expansionary mode or they're going to be more conservative and keep looking at what the global rating agencies say. So I think this 3.9 number moving towards 3.5 or 3.7, 3.7 is what we are pitching for at Care Ratings, is something which we'll be looking out for. The second number, of course, which will be of interest will be the disinvestment target, because my sense is that even in the past, the disinvestment number is more of a kind of a balancing item, where when we see that we have a certain amount of expenditure plan, we're seeing where the revenue is coming from. If we're not able to balance it, we're putting that particular number out there. So I think that's going to be another interesting number which we'll be looking for. I think the third number which we'll be looking out for will be on bank capitalization. While 25,000 crores is something which they have spoken of earlier, now the market of course expects that it could be maybe slightly higher, because something higher will definitely be good for the banking system, and I think that will be another area of attention for on the budget. And last of all, I think is, the government has announced a number of policies last year, especially for thing on inclusive growth, Startup India, something on crop insurance. I think we'll wait to see whether these things get translated into numbers, because it's one thing to have a policy which is obviously positive for growth, but the second part is that we need to also see the corresponding increases in the allocations or any kind of concessions given. Now, from the rating agency perspective, we have seen that earlier we had a kind of a subsidy which was given for the SMEs, which was virtually withdrawn last year. We're just hoping that it comes back, because we're looking at giving a thrust to the SMEs as well as startups. I think we need to see certain kind of benefits going to them for this to happen.
Mr. Pradeep Chaudhary, former chairman, State Bank of India. Mr. Chaudhary, I want to get to you and get your thoughts on the PSU Bank recap and what can we expect?
I think PSU Bank recap is a need-based. You can never say that I have budgetary constraints. Even if you see the UTI recap when it happened, it was not planned, it was not anticipated, but it had to be done. So the PSU Bank recap would depend on what it takes to bring them to an acceptable level of Basel I capital adequacy. And the second thing I'd look to is the market borrowing number, because that is what would influence the overall interest rate environment. And we have seen last year that though RBI said that they're trying to reduce the interest rates, but the 10-year bond yield is very firm where it is. And thirdly, I think I would also focus on particularly the outlays for education, primary education and healthcare. That is where private investment or leverage investment would not be available.
Going back to first point, which is PSU Bank recap, it's not as if you're recapitalizing to lend more, right? You're basically recapitalizing because your net worth is not there anymore because of the NPAs. So we are in a bit of a, it's not regular recap in that sense.
Don't take such, sweeping.
I think Mr. Chaudhary, your mic is fallen off.
Net worth is not negative.
Mr. Chaudhary, your mic is fallen off. So let me just ask you to fix that. Okay, so.
Yeah, so
I think
net worth is not negative.
Yes.
But even to be in the continuous mode of lending, like issuing letters of credits and guarantees, they need to have the minimum levels of capital that is required under Basel. So the banks have to be brought to that level in order to even continue their existing operations.
The total NPAs are now more than the total combined market value of PSU banks, by the way, yes. Ms. Chaudhary, right? Yes. This is not normal.
No, this is not normal.
That is all the point I was making.
But it's not, don't take this extreme. I think these are very
No, I am all for PSU Bank recap.
It's not that. These are half-truths. For example, if I have taken a home loan and I have paid it for 10 years, 120 installments, and I have not paid, say, 10. Out of 120, I paid 110, I have not paid 10. Now, this number would show up in the balance sheet or in the statement as NPA. But does it mean that the prospect of recoverability from this loan account is zero? Certainly not, because there is an underlying security and this person has paid with a delay. So similarly, it has to be applied to what is the extent of delinquency and what is the likelihood of recovery from the underlying assets. So it is very simplistic to relate to the non-performing.
But the point is, you have to have some threshold, right? That's the...
No, not a non-PA. It has to be the threshold, has to be the provision coverage. No, it has to be more detailed and more focused. It has to be provision coverage, that to what extent...
I know what your view is, that industry must be given forbearance.
No, no, I'm not saying that. I'm not saying that, because there is no running away from Basel norms. And you can't say that I'm in the sick bay, so don't apply the normal rules. No, it doesn't work that way.
Okay.
But you have to recognize the problem and not to exaggerate it and not also to underestimate.
Let Mr. Unnikrishnan come in as well on this.
Yeah. The point of view has changed in the recent past on account of the fact that between the last 2 years, the debt recovery, unrecovered debt, which is supposed to be, it's almost tripled. 150,000 crore was a debt recovered or a recoverable level, which remained in 12-13. In 14-15, it's climbed down to 435,000. So that is where the alarm bells have rung, and possibly the RBI.
450 is the what is the?
But should have been recovered, but didn't recover.
Okay.
Now, the other positive point supporting Mr. Chowdhury is that the underlying behind the NPAs or the loans are not totally dead. So the big numbers people do talk about, see, there are power plants already in existence, but they have an inability to pay the loan back. So it's not that assets are virtually nil. If one were to take us to, say, mechanism should be there to make it workable, so that you make money out of the assets already created and repay to the bank. So that's why RBI is told convert debt into equity. But banks are incapable of going and running a power plant in Jharkhand. So we need to find government taking a lead. Fundamentally, when you talk about NPA, whose money is this? The citizens' money. Who represents the citizens in the country? It is the government of the country. So government has got a pivotal role at this point.
And PSU banks as well.
Well, they are intermediary, I would say that. The prime role is that of the government.
You know, well, talking about this budget and what it can do for the banking space, you know, beyond the recapitalization of banks, there are options that are out there, theories that are floating about, you know, perhaps the National Infrastructure and Investment Fund and the role that it could play in supporting some of the you know, turnaround moves by the government for the PSU banks. I'm going to get Atul Joshi to weigh in on that. Atul, just, you know, the potential to take the National Infrastructure and Investment Fund to take on some of these projects that banks find themselves saddled with. Weigh in on that.
I think the government made an announcement last year but has not taken any concrete steps. What I would look for and expect from the finance minister is to create a multiplier effect out of the key situation in which we are, which is to expand the fiscal deficit or to keep it at 3.7, 3.8% or to bring it to 3.5%. The key thing is to create a multiplier effect. Now, NIIF is the one such catalyst which could be used by the government, where the government could actually use this fund to have development not only in infrastructure, but also to recapitalize banks in a very big way. And the government needs to basically create a structure whereby you have a bank holding company, put money through NIIF into that and leverage that company for 25-year bonds, and the repayment of that bond could be out of the dividends that the government receives out of the PSU banks. Now, this is something which the government has not really been doing or has not really dwelt upon. Same thing happens when it comes to the NIIF and the VGF component of the infrastructure projects. The government could actually use NIIF, put in equity instead of VGF, which is a one-time allocation, so that in future, right now we are talking about disinvestments because these investments were made in 1950s, 1960s, 1970s. But what about 20 years, 30 years down the line? So we do need to have NIIF used in such a way which is strategically very important for 20 years, 30 years down the line. Whether this government remains, another party comes, I think the country should definitely have something where it can use disinvestments for future created today.
You know, I'm going to get Madan into this as well, because we've been talking about the larger theme of trade-offs that Mr. Jaitley has to make. And, you know, if you had to draw up a sort of a stack out there, Madan, and say, you know, if it's a choice between this and this, pick this, would you go ahead and draw that list up for us just before we start listening to the speech?
No, in fact, I think the major expectation is that the government spends more on infrastructure. Now, to my mind, I think the scope for it is very much limited because if you look at, say, last year's budget, for example, we had around 1.3 lakh crores which was allotted for infrastructure spending. Now, out of this 1.3 lakh crores, we have seen in the past that while the budgets have always been targeting something like 1.1, 1.2 lakh crores, we finally end up spending something like 70 or 80,000 crores because we need to balance the budget. When the disinvestment plans aren't really met, then you need to make sure that the fiscal deficit number looks healthy, and that's when we start cutting down on the capital expenditure. So I think this is particularly the kind of number which we're looking at is that can we go from 1.3 to say 1.4 or 1.5 lakh crores? And more importantly, in case last year we had targeted 1.3 lakh crores, do we actually meet this particular target or whether we're going to slip up again? Because we've had we've had fairly contrary pictures. One is that we've had the government saying that a lot of contracts have been awarded, especially in roads and railways. But if we're looking at the ground level, look at the corporates, the construction sector, whether there's been a corresponding increase in their investments, the answer is actually no. If you look at the infrastructure industry, cement, steel, has the production gone up? The answer again is no. So it's quite possible that these contracts have been awarded, but it would take some time before they materialize. So in terms of the finance minister providing any kind of thrust on growth, I think it'll have to be more from the expenditure side, because on the revenue side, things are very much limited. Because if you're talking in terms of further reduction in taxes, like the supply side economics dictates, saying that lower the taxes in order to increase your output, I don't think we'll be able to do much out there because the government is cognizant of the fact that your revenue has to increase and they cannot really slip up on the revenue right now. So I think it's going to be only infrastructure and infrastructure all the way. And probably to a certain extent, since Thomas Piketty has been dominating the economic survey, there could be some signs of that also in the budget, where you talk in terms of increasing the expenditures on social allocation, especially the NDTV program, or maybe something even in terms of taxation, where certain concessions are removed for the so-called more affluent classes.
Yeah, that's an interesting last point to ponder over. I think, Madan will, but it's a relevant point as well. I think there have been editorials, maybe trial balloons being floated saying, was the government and after 2 years in power going to, force a change in trajectory in terms of, more, instead of being market friendly, be more, rural friendly, poor friendly. Will we see that in this budget? Again, I mean, even there, just like in the case of infrastructure spending, scope is limited because revenues are limited as well, unless, of course, you start to borrow a lot more. Mr. Chaudhary, back to you. What about something like, so the markets, Mr. Chaudhary, have been saying, even if you provide, say, 50,000 crores this year for PSU bank recap, unless you change the framework, maybe change managements, get new people in, a new way of managing the money, 5 years down the line, we'll be in the same problem once again. As an ex-top PSU banker, I know you'll have disagreements with that.
How do you explain the divergence between SBI and other banks?
Right.
Now, both are PSUs, the selection is done the same way and all that. And secondly, I only hope that the remedy does not become worse than the disease. That, in PSU banks, you said, well, we'll do a better selection of heads. And today you have separated the function of chairman and the MD. But it took 1 year to appoint MDs of the banks. And what happened during the interregnum? That the management was so tentative, they did not take major decisions on provisioning. So it is not, the symbolic
but
steps.
That doesn't take away from the soundness of the suggestion that you may
and secondly, even it is not right to attribute only to PSU banks. What about Global Trust Bank? That was a private bank, but it failed. It had all the participation. Of course. So, and look at the number of private banks that were licensed. Right. How many of them exist today? So, banking is a different space. And secondly, even foreign banks have been given the option of subsidiarization, and they say you can have unlimited branch licensing if you follow the Indian rules. But not one single foreign bank has opted for that. And if you look at Stanchart, which had such a long legacy in India, first as Grindlays, then Standard Chartered, and even that is not, free from the kind of impact that has happened in the PSU banks.
Apologies for that interruption, Mr. Chaudhary. I'm going to go straight across to Sunil Kant Munjal, Chairman of Hero Corporate Service, and Dr. Naushad Forbes, President-designate CII and Co-Chairman of Forbes Marshall. Thanks very much for joining us this morning ahead of Finance Minister Jaitley's speech. Mr. Munjal, I'm coming straight to you. We've had, a conversation with you right here on NDTV Profit, but crystallize your expectations from the Finance Minister this time around.
So one thing is clear, the government has full realization of the current situation both in India and in the global economy. So our expectation would be that the government would try and stimulate demand through higher spend on infrastructure, because it has two benefits. One is, of course, while the spend is on, it creates a large number of jobs. Once having been completed, these projects add a multiplier to the economy itself. We also would have no objection. In fact, industry has now gone and said, we don't mind slippage on the FRBM numbers for this year, as long as the spend is visible and it's transparent, and the spend is on asset creating capital expenditure. I think there is a need for us, while growing infrastructure, to encourage those industries which have a multiplier, like the automotive industry, the textile industry, the home construction industry. There needs to be certainly higher spend in the rural areas, both on agri infrastructure and on general infrastructure, because that is an area which has suffered due to 2 poor monsoons. So it needs both support on the agri side and the non-agri economy in the rural areas.
Okay, gentlemen, I'm going to make a request. I think one of your phones is perhaps ringing and interfering with the quality of the sound that we're getting from you. If we put that off, that'll make this a more seamless conversation. Mr. Forbes, I'm coming to you next. Mr. Munjal set the tone. Infrastructure spend, important. If there's some fiscal slippage, it's fine as long as the quality of the spend is strong. Focus on agriculture, focus on rural India, stimulate demand. Those are some of the broad points that he's put out there. But I'm going to just reflect a little bit on what the economic survey has said, and one piece of it, which seems to be focused on perhaps, the necessity to tax the well-off a little more stringently. How do you think that could go down?
Well, sorry, no. It depends a little on how they intend to go about this. I mean, in an interview, the chief economic advisor was asked a question about taxing agricultural income, and so far, taxing agricultural income has been off limits politically. Not just with this government, but with any government. And it is time, I think, that we started seeing richness as needing taxation, as opposed to seeing the source of income as needing taxation. So if people are rich, they should pay tax, and if people are poor, they need help, regardless of whether the source of richness is agricultural, or whether it's from corporate income, or whether it's from investment income. So at least making some announcements in that direction and saying that, look, this is an area that we're starting to look at, or starting to look at some kind of a minimum approach of taxing rural incomes that are above a certain, maybe very high threshold to begin with, could be a way in which one could move to a more rational and broad-based tax system.
Dr. Forbes, I'm just going to take a couple of steps back and ask you the same question I put to Mr. Munjal, but in a slightly different way. What would constitute perhaps negative for, corporate sentiment, investor sentiment, if, Mr. Jaitley proceeded on that front in the budget? I.e., what could he say that you would take as negative?
Well, if we saw, for example, tax rates going up, right, with no instead of going down as we expect, we expect corporate taxes to move in the direction that he set out last year, of corporate taxes being progressively reduced and concessions being progressively reduced. If we go in the opposite direction to that, that would certainly constitute a negative. Second, if we see, as Sunil mentioned just now, if we see a lot of spending coming through without the intended outcome being clear. So if we see lots of 100 crore giveaways, 100 crores for this, 100 crores for that, 100 crores for something else, and without an overall direction being provided in terms of what is it all supposed to add up to in terms of outcome, we would see that as a negative too.
Mr. Munjal, wanted your thoughts before we wrap up this conversation, because I know you have a busy schedule, on what kind of number you're looking for in terms of disinvestment targets. And I ask that in light of disinvestment targets successively every year being missed, and therefore just, what numbers really mean when it comes to disinvestment? Are they sacrosanct? Aren't they? What are you going to be looking for?
I think a moderate target for disinvestment would be a sensible idea at this point in time, because as you said, we've had slippage on these targets in the previous years, and these previous years going back not 1 or 2, but going back 10 years actually. Every year we've had a slippage on these targets. So I think a moderate target would be absolutely okay, as long as we can up the action on the actual disinvestment. I also think it may be a good idea to keep disinvestment on regardless of how the markets, whether they're going up and down, because they will go up and down. As we've seen, when the markets have been trending downwards, some of the disinvestments have been held back in earlier years. So it may be a good idea at this moment, considering the liquidity with the government, considering the fiscal headroom, that those resources may actually be encouraged to be put back into infrastructure. And I also think it's a good idea for us to look at some below-the-line spends taking place, which are off the budget. Spends from public sector, quasi-public sector institutions and companies, railways, etc. I think a combination of these two, because disinvestment alone in isolation means nothing. It's what you do with the resources and how you also shape up the companies that you are disinvesting from. I think both sides need equal attention.
Mr. Munjal, Dr. Forbes, thanks very much for joining us, and we look forward to actually talking to you post the budget, where we'll know whether we've been disappointed or perhaps, the finance minister has exceeded expectations. Good talking to you. We've got, 8-9 minutes to go for the budget speech, Prashant?
Absolutely, man. We're just counting down now. By the way, just a quick check on the market as well. So you got a 12-odd point cut in the Nifty. So absolutely low expectations. And that was, you just look at the futures, open interest and things like that, and you get a sense that going into this one, there are very few expectations. China was the big market which is down. By the way, I can tell you that after today, unless, of course, this one really turns things around one way or the other, the budget that is, focus will go back on China. China has, for the 5th straight day, sort of pegged the reference rate, the yuan reference rate lower. So, of course, now it's going to be all about the budget for the next couple of hours, but the focus will come back to the bigger overlays. China is big, one such big thing. PSU banks are up the most. That kind of tells you, a little bit about expectations. PSU bank recap, or a very obvious thing which we will see. SBI is up 5%. Bank of Baroda, Punjab National Bank. PNB, of course, now, after I think a month or so, heads out of the Nifty, no longer part of the Nifty. Changes have been announced. But for now, the 3 PSU bank names are the top gainers. It's followed by ICICI Bank, you've got Tata Steel, you've got Kane India, Vedanta, Dr. Reddy's, ONGC, and Grasim, which are some of the other gainers. 21 stocks higher, the rest down at this point in time. GAIL, BPCL are the top losers right now as well. Mr. Parikh, just on this point, some of the suggestions which the economic survey made, tax agri income, for example, right? Above a certain threshold, etc. Any thoughts on that?
So, this is again, this has been something which has been discussed many times, but I don't think that there hasn't been a political will to be able to tax agricultural income. So there have been many discussions about what is the, if there has to be some relief or some benefits that farmers should be provided. Is that relief going to the right category of farmers? Are there a category of farmers who are now much more affluent, and therefore there's no reason why they should continue to get a tax concession? But it's been something which, I don't think that there has been will to move forward and to be able to start discriminating between the different categories of agricultural potential taxpayers, and to be able to sort of say that, okay, there is a category here which ought to be brought into the tax net, and then there is a category which can continue to be exempt. So I do think that there is a logic in going ahead and taxing a part of the population, if not all of it, and it's just a question of whether we have the will to be able to do so.
Especially this year, I think the will would be particularly lower. We're talking about actually more spending in the rural sector, right? Especially and also in social schemes, etc. So I think it'll be a tough ask of the FM to do that. But this entire thing which we keep talking about year after year, tax more people, expand the tax base, So in that regard, Mr. Parikh, I mean, are we going to see anything at all, or?
So I think that's a question of more effective enforcement and more effective administration. There is clearly a very small tax base that we have. There is a large population out there which potentially ought to be within the tax net, but which stays below it, stays out of it for a variety of reasons and using a variety of means. So what needs to happen is that the government needs to, or the tax administration needs to be using different techniques and approaches to be able to find ways in which it can progressively track these taxpayers and draw them into the tax net. And I think GST, as an example, is one thing which will potentially bring companies or taxpayers who are outside the net into the tax net. And there are, better data mining, better use of, other analytical tools. There are ways in which the Revenue Department could start bringing more people into the net, and they are doing some of that. But it needs to be done potentially more effectively so that the net actually broadens much more than what we've been able to accomplish over the last several years.
Mr. Jamla, again, to come back to the market, from a capital market point of view, what are the, very simply put for our viewers, what should one watch out for? I think most expectations are on the negative side, capital gains. So just recap that once again, briefly.
Very quickly, I mean, at this point in time, one should not look at the regressive temptation to bridge the gap of 40,000 crores on direct tax collection and do a little bit of tinkering either ways by moving the needle upwards on long-term capital gains tax or the period of holding. Okay. So purely from a capital market point of time, that would be something. Another related area is one of those recommendations of the Ishwar Committee report with regard to Section 14A, which is a very contentious issue, and majority of litigation does get surrounded by the fact that whether you should be entitled to claim certain deductions on non-exempt income, and the way 14A litigation has sort of grown over a period of time. I think to that extent, some
this is related to the to capital market.
Yeah, largely because you've got income which is not subject to tax, and corresponding deductions are being contested by tax authorities, okay. And there is a general view that considerable litigation is around that. So some clarity on 14A, which has a collateral effect on assuaging the capital market. So I think these are two immediate broader key considerations apart from some relatable items.
You know, in unrelated news, because we're going to be talking about the budget for the next couple of hours, the Delhi High Court has upheld the call drop fines on telecom companies, and it says that TRAI has the liberty to take action on call drops, and it's dismissed the plea by the mobile firms, against this TRAI imposed fine on call drops. And this opens up a whole Pandora's box, at least in my opinion. Put yourself in the consumer's shoes. Your calls drop, you demand a fine, companies have to pay up. Now the Delhi High Court says, gotta follow what the TRAI says.
I had the number somewhere in terms of the total fine. The numbers actually were pretty significant. So the stocks are actually selling off a little bit. You can see Idea there coming off sharply. I think Bharti will come up on the screen as well. There's a bit of a cut coming in there as well. Mr. Unikrishnan, from a capital goods perspective, anything for your industry which now fold?
Yes, certainly.
Yes.
We have had a major drop in our exports in the last year, and in that, capital goods is one of the sectors which got impacted. Currency-wise, a couple of our major competing countries like Europe and Japan had advantage of 20% percentage. We look forward to incentives, certainly. I mean, this is not a good word in today's days, but a country which is having a capital current account deficit has got to be supporting exports. So we look forward to reinstatement of some of the incentives which are withdrawn for supporting exports, and something more to be added. Till such time GST comes into being, we don't have a level playing field in comparison to our competitors across the globe. So it has got to be treated separately, and also to protect the jobs in the country. Second item is that some of our major industries like steel industry, commodity industry, they are on the verge of closure at this point of time with the global commodity prices having come down. We have put a minimum import price regime for one item, but we need to look at it a little more holistically to ensure that the job provisions in the country doesn't come down in the coming year. Now, that's an area where the government is capable of taxing or putting a preventive duty or hiking of the duty to ensure that there is income coming, and also a deterrent from importing to keep the jobs on. These are the two main items that we look forward to.
But doesn't the minimum import hurt players of capital goods makers?
We are willing to take it on. In any case, there is a capacity available in the country. I mean, somewhere we have to also take a call that if there is a duty available at a higher rate for the finished good to be imported, and the raw material is available at a lower one, it is preferred that way we have a higher duty for the finished good, so long as the material is available. But if it is something which is not manufactured in the country, purely dependent upon import, then it will be a different issue.
You want to add something?
Yeah, I mean, from market's point of view, I thought the time has come, maybe sooner or later, where the government has to make a clear stand on what's its take on the often rumor which we keep on hearing on the Mauritian tax treaty. I mean, I don't know whether it's the right time or not, but sooner or later, the air has to be demystified so that there is some amount of certainty. I know GAR is still round the corner and it might be looked at it a little more carefully with the passage of time and so much of policy technology available. I think that's where a firm stand of government should help.
Okay, you know, you've got those images on your screen, so pretty much any minute now we'll have Finance Minister Arun Jaitley presenting the speech. Typically, and I wish I had those statistics for easy reference, typically, but Mr. Jaitley's speeches tend to be a shade longer. You know, he does, you know, take a little longer than his immediate past finance ministers. So we're saying 11 o'clock, 12:30 is what we're factoring in for the speech to be over, but it could be 12:45, could be 1 o'clock. Before
he's already speak or no? Commotion in the House, I guess, right? I mean, the speech, I mean, 11 is when it's supposed to. Yeah, there you go. Let's cut across. Yes.
Not now. After this. No, not now. Not today. बैठिए, paper नहीं लहराते हैं. Please, बैठिए. I will listen.
Madam Speaker,
okay.
I rise to present a statement of the estimatory receipts and expenditure of the Government of India for the year 2016-17.